All right, what's up, guys? Just gonna do this real quick as I can. I'm gonna be drawing a range, showing how I establish my ranges that I like to trade off of. Because ranges for me, they're gonna rotate. They're gonna rotate all the way around, right? Rotate up above the range, below the range, but the majority of the price action is gonna be inside of the range, kind of like this. So, few things I do to establish a range. One, when I draw a channel, it's going to have a midline. The midline is going to be key because I want the midline to be respected. So first things first, we're bullish and then we're into a trading range, right? Just the way that I draw them. You can draw them however you want. You could draw them up here like this on the high and then on the low. Then you can see all the price actions in the middle here looking choppy. And if you want to trade the very far extremes, you can go ahead and do that. I find it easier for me with the way I trade to have my ranges confirmed based off of breaking outside and then going to the extreme on the other side and holding. And I like to have these areas on the outside of the range, like below and above. I like this to be above and this to be below so I can fade back into the range and then catch it to the other side. So what I do, right, I'm going to zoom in a little bit here. So what I do is I like to look at this, right? We come up, you start watching this, and the minute we reject it here again twice, we're this wick here and then this wick here, I'm like, okay, are we going to range? First things first, I always ask myself, are we going to range? That's always in the back of my mind, especially after a big, strong bullish move or big, strong bearish move down. The market's going to have to take profits. We're going to see if we can accept some of these higher prices up here. So, is this going to be some sort of a range? I drew the other day. I said, okay, I have to start thinking about this being a range. I know I posted something really, really prematurely, something like this, right? And then, we've played out and it pretty much confirmed itself, and I readjusted here and there based off of confirming the range. But initially, I believe I had something like this, maybe down here. But what I like to look at is one thing, right? I like to have my range low broken and my range high broken, right? And when it breaks, I like it to go to the opposite side. So with that being said, let me just make this going, let me have this go straight across here so it's not crooked. All right, so we have this wick here and then these wicks here. That looks like a breakout, peak above, and then come back down, right? What do we have here? We have some wicks down here. So I will go ahead and I bring this down, right? See how I'm now touching this wick here? And then going through here. Okay, I have this little wick here, right? I get very, very intricate with it. I have this wick here. Okay, if I bring this down a little bit more to this wick, am I touching another wick over here? Yes, I am. I'm touching this wick here, small little peak above, and we come back down, peak above, come back down. So I'm touching a wick here, and I am touching a wick here. So now that I kind of have the top of the range established for now, I'm going to go ahead and look at the bottom of the range. I'm going to start bringing this up, right? I want the majority of the wicks to touch, right? So we're touching here. That's beautiful right there, right? So if this was all the price action we have, this is kind of what I like to see, right? This is pretty good. So I'm going to do one thing. I'm going to tell you my rules. It needs to respect, then break, then respect. That has to happen on both sides. It has to respect, then break, then respect, right? So I'm liking this specific spot kind of right now. For now, we're gonna reevaluate this, but look at the midline holding, midline bouncing. Okay, we can use this kind of zone as a range, right? Always look at it as a zone. It's never going to be perfect. Like this is a zone, right? A little bit below, maybe a little bit inside of it, right? It's never going to be perfect, especially on NQ. It wicks a lot, wicks up and down a lot. But what I'm going to show you right now is this. I like it a little lower, actually. Maybe like right Yeah, right there. So we wick up. Where we're at, right? Yeah, I really do like it like that. Kind of that wick right there, kind of that wick right there. So I like it to respect, break it, and then the next time we come back, okay, we broke it, and we respect it. Right? Here we respect it, we break it, and then now we need to respect it. So I need this a little bit lower, actually, right? I need this a little bit lower. I need it to respect after it gets broken. I like that, right? Because it respects down here on these wicks. Then it breaks. And when it comes back to retest, it respects. Right? So it respects, it breaks, it respects, it breaks, it respects. Okay, now let's just continue this over. Okay, we're a little high. We're a little high. Maybe not. Maybe not. Maybe it's a little lower. So let's say you have this much data and you want to go ahead and you want to start really fine-tuning your range. Okay, maybe we're down here, right? So maybe we can, maybe we're up a little higher. Ooh, I do like that. Respecting here and then it breaks. Okay. This is what I do with the ranges. Right? So we peak. Okay, cool. We break. We don't retest it. We don't retest it. Let's go to the right here. But as you can see, we're rotating. Now, if this is the data that we have, all right, we're a little high. Maybe it was there. Because look at the break up, break in, try to break out, and then fail. I do like that. The original way I had that, right around there. Now the bottom, I like it right around there. Because I like the wicks, and every time we break out, we come back in. And then as you can see, we broke back into the range there. So that's kind of what I do, right? I want to see as many wicks as possible here on the 4,000 tick, the 500 tick, because I did it originally on the 500 tick. So it was a little bit easier zooming in on this day, these 2 days here, where I was seeing that we might be ranging. But yeah, I want to see peaks above and then come back in and then respect, right? Peak above, respect. Peak below, respect. 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 Peaks below, what happens next? Come back in and respect. Come back up to the top, we're respecting the higher the range, respecting the higher the range. Every time we peak below, I want to see a battle. I want to see a battle and then a break back in and then respecting, right? Even though this one, we broke below, we come up, we broke below, we peaked below, come back in, and then we battled, right? We battled in that zone. Broke below, where did we go? We battled. As you can see, this gives you a decent area here to work with. You can zoom in on a faster time frame. Then over here, what do? We peeked back into the range, sold off, and then when we broke into the range, if you zoom in on this, you know, we broke in, we held here, and then we continue. What happened over here? We broke below, wicked back up, came back in the range, and as you can see, every time we reach the range, we're battling. This is a battle. When you see this on a range, it's a battle. You know it's either going to break out or break down, right? There's a lot of transactions going through here, right? Each candle is 4,000 ticks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 candles with math. I don't know what the hell that equals. 12 times 4,000. That's how many transactions came through in this area. So you know the breakdown or the breakout is going to be huge or strong. What did we do? We fought, broke down, we came back, we retested, right? That's what I want to see. I want to see every time we come back to the range, we retest and it's a struggle or it's a battle. Sellers are trying to come, sellers get stopped out, buyers come, respect and hold. And then we peaked above, came back down, and look at the midline. Midlines, I want to see battles. Midlines, I want to see battles and support or resistance. Battles, 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 and battle, right? So you might ask, why is this important when it comes to a range? Well, I like to fade the range. So if we zoom in here on a 500 tick chart and we go down on this range that I just drew, I want to fade the range, right? This is different, right? This was a move, it broke and it continued, but they tried once, tried again, couldn't do it. And when we got back into the range at that area, after all these sellers down here are trapped, what did we get? We got them stopping out and helping for the momentum to the opposite side, right? And what do? You take profits here at the midline, take profits at the high of the range. As you can see, we came back down, we bounced at the midline, and now we're peaking below, right? I want to see those battles there. Let's see. This other day right here, this was the range broke. We had a trend. We had a trend down. We had overshoot rules and below the range. We have multiple attempts by the sellers here on the 500 tick chart. You can see, right? Multiple attempts. So when we break below the range, I want to see attempts. We have attempt number 1. We have attempt number 2. And then they got stopped out. And every time they try, and of course this one they try into a trap, we continue higher, right? This is textbook fading of the range. Come back up, you're expecting the sellers to try to come in here at the bottom of the range, which they did. They tried, but they failed. And as they failed, they fought and battled, and then got stopped out, right? This is a clear stop out above here. See that? That's a stop out. They got stopped out quickly. So that's what I do. I will use these range low and range highs as if I'm bearish, I'm expecting somewhere in the bottom of this range to hold. So I can get my location down, I can have my risk reward a lot better, and I can, hopefully catch a bigger move back down. Or if I'm fading back into the range, I can wait until the range breaks and holds, and then I can use that as, like, if I'm expecting this area right here to be stop losses, I can enter long here after I see all these times. I can enter long, and I can have my stop somewhere below this range, pretty tight below this range, and then take profits at the midline. If I'm expecting the midline to hold, vice versa, I can just leave my stop a little above the midline and do it that way. So over here, same thing. What do? We came down, we broke, retested the range, and then we have this. This is just a clear reversal pattern, and it went overnight. We broke this swing, and sellers couldn't bring it down. And after that, right, we have the reversal pattern where once we break this, it gives us the stop out of those late shorts that came in this area, right? All those late shorts got stopped out to fade us back into the range during the London session. Today, let's see what we had happen today, right? Today we had a lot of shorts coming in below the range, right? A lot of transactions, a lot of shorts coming in below the range. Yeah, there was probably some profits taken here, but you could see based off of this move higher, there were definitely shorts on the wrong side, and they started puking, and then gave the buyers that momentum and that strength to start bringing price all the way back to the extreme of the range. So I like drawing it that way. And let's go back to the 4,000 tick chart just so I can go over why I don't like it the other way. Because you have good risk reward doing it the other way, but you have less opportunities to trade, right? So if, let's say you were like, okay, this is the high. Whoops. Okay, this is the high. This is the low. And you're doing that, right? You're entering somewhere in the middle of a range here. Somewhere in the middle. Like, the don't diddle in the middle will affect you when you do it this way. That's what I've noticed, right? And maybe if you bring it down here, if you're like, okay, this is the range high, where are you going to put your range low? If you're like, oh, this is the range low down here. Okay, let's go ahead, copy this, take this off. All right, yeah, maybe, but you have less opportunity to fade back in and catch that move, right? You might be getting chopped the hell up down here thinking this is where the bottom of the range is, and you're getting chopped the hell up trying to go long, when I'm looking at it like that's below the range. I'm waiting for the break back in and to fade it, right? So that's what I do with my ranges. I like the respect, then break, then respect. Respect, break, respect, break, respect, break, respect, right? respected. It broke here. Respected right here. Broke here. Respected right there. Broke here. Started to respect, but then it broke. And ultimately started to kind of chop, and sellers tried to make their moves down, right? But every time we broke above, right, we broke here. We respected right there. We broke here. We respected right after. We broke here. Where did we respect? Right there. Right? That's why I like the break and then respect. Because you look in theory with the way shorter term time frame traders trade, where do they put their stop losses, right? They're going to put their stop losses in the most obvious places. And that's going to be the liquidity breaking outside of the range, right? So if you were bearish, right? Or I'm sorry, if you're breakout traders are going to put their stop losses, their buy stops above here. What happens when those buy stops get triggered and there's really no buyers besides the breakout traders in the stop losses, and then sellers come back in because they want it back in this range? Same thing over here. Breakout traders and then weak shorts get stopped out. What happened right here? Smart buyers were coming in low, maybe coming in on a retest. Smart buyers were taking profits. Smart sellers are shorting here. Now, breakout traders are doing what? They are trying to break out above this range. Breakout traders are putting their buy stop orders right here. Weak sellers are trying to time the top, not knowing we might sweep some liquidity above this high, because you might have sellers, but they might be putting their stop losses right above this high, right? So if you had stop losses right here, what happens? You hit those stop losses, helps price push higher, then you get those breakout traders and more stop losses, brings price higher, sweeps the liquidity, right? Sweeps the liquidity above these highs here, because that's where all the sellers are going to put their stop losses. They're all going to put them there. Anybody shorting and still thinking that price is going to go down, or if they're shorting on the way up here, those weak hands are going to put their stops right above this high. Where is it located? Right at the top of the range. Sweeps it, we come back down. Now that we're coming back down, where's a logical price to take profits? Scales in the middle, profits on the bottom. If you're really expecting more and you have a decent sized position and you want to fade this even further, sure, you can fade it even further. But that's what I do with my ranges. I like a break and a hold, break and a hold, break and a hold, break and a respect, break and a respect. I hope that helps you guys with the way I trade and the way I view the ranges. And ultimately, with that being said, final thing, just to put it into perspective, that's what I like to see, right? I like to see the range rotate outside of the range, back into the range, rotate out, back in. See what I'm saying? It's rotating around the range. It rotates around the range. Those, right? Above, below, plays in the middle, rotates below, snaps back in. See what I'm saying? It rotates. Ranges rotate. That's it, guys. Good luck, and hopefully this helps you with the way I view ranges.